Hi there, traders. Now, I just want to give you a bit of a sort of heads up on what I do with technical analysis as far as drawing trend lines and these sorts of things to really make the analysis process easier when you come back to the screens day in, day out, right? Now, when you come back to the screens each time you've been away, whether you're at work or you've been out for the day or whatever it is, you don't want to spend endless hours going through all of your charts all the time, right? You don't need to. What you need to do is see what's happened, see where they are, and then start to make some decisions around what potentially could be the next trade. Now, I do this quite simply by, you see on these charts, and I do it on all of them, global markets, FX, equities, cryptos, or whatever it might be. It's an easy way to sort of formulate what's going on. Now, you'll see like just a standard support or resistance trend line, I have in red, right? That sort of just tells me that the trend line is valid. Okay, so that's very easy for me to sort of work out where those potential entry levels are. Okay, but the real key here is what has happened in the past. Now you'll see here on just about all of these charts, you'll see an orange line. Well, this one here, not the one up there. And this does something else for me, right? The orange line tells me where it's been, and I'll know, like for instance, I've got the dollar index here. It's broken down through the orange line. So that tells me we're in an uptrend and it's now broken down. The next support level, I can see it clearly is back down here and current resistance is up here. So what that tells me is the actual instrument, whatever it might be, was in an uptrend and it's now broken down, right? In the case of Euro, this level here, it's broken up through it. So I know where it's been, okay, where the momentum is. So basically, if it's broken an orange line, it means the initial trend momentum is broken, right? And that should highlight the next potential level, whether that's top side or downside, and you can go from there. Now, you wouldn't have it on all charts. Usually it is. Like oil, for instance, is sideways, and it isn't really going anywhere, right? So that there's no need to be sort of making amendments there. So like the S&P broke down through this core level here. That means it was in an uptrend. Momentum is now down, and we now have a resistance line coming in here. And the exact same thing, obviously, for the NASDAQ. You can see, well, you can see where it's broken down. Okay, just change that to orange. So the orange gives us a bit of a heads up. So when you come back to the screens, you don't have to sort of go around thinking, hang on, what's going on here, right? Same for the currencies, right? The dollar index has been going up. The trend momentum is broken. Same on dollar Swiss, dollar yen, right? Dollar CAD, and the reverse for the other pairs. So you can actually see where momentum flipped over and what that break level was and where the potential is from here. Now, what it doesn't mean is, don't get confused with this, that there's a massive big move to the next level, right? It doesn't mean that. It just means it's been in a downtrend. The trend is slightly broken. Momentum has been somewhat subdued. Now we have levels on the downside and top side. They're the next levels where it could move to. So I say something else here, but that's where it could move to, and that's what you need to be sort of focusing on. Now, the overall trend in these things comes from the fundamentals. We are looking at the technical side. So technically, this is the easiest way I have found after, what are we in here, 22, like 32 years, okay, of doing this. This is the easiest way for me to go, okay, yep, Euro was going down, it's now popped higher. Doesn't mean the trend's over, just means the initial momentum has gone. My targets here are up around 108, or when the dollar trend kicks back in again, I'll be looking back down here around 105.5, right? A very easy way to set up your charts. So when you do come back after being away from the screens, you don't have to think, hang on, what was that instrument doing again? Where has it been? What's it been up to? And the fact is, when you are looking at different asset classes, like if you're just focusing on, say, Forex, right, you'll generally get a feel for the majors. The crosses, you'll have to go in and sort of work out which ones are going up and which ones are going down. But then you go into cryptos, equities, and so the global markets, commodities, metals, etc. This is the best way to keep abreast of it. And then you can really isolate situations where you should be looking at some of the stats, right, of what's been happening on, say, the major instruments, say the currencies. You're looking at the pairs that are really skewed, like dollar yen, 10.97%, coming back to your charts and going, wow, this thing's gone up with this dollar rally this far. It's broken down here. And this is where a subtle long squeeze can happen. See how the move is, it's just dribbling lower. That keeps people who are long in the trade because they think, oh, it hasn't really gone yet, hasn't gone. This thing is very close to sort of just completely falling out of bed. 700 points, easy. I mean, it went up 15, 16 cents, okay, in the matter of a couple of months. You don't think it can go down? I'm telling you, it can, right? This is one way to do it, by simply having a look at your stats, putting it together with some sort of structure for your charts, and that's the way you can keep ahead of it. The other thing is as well, you may notice I actually sort of shrink up my charts. Let me just get that up there to sort of see where it's been, because then if you have once you've done your analysis, get more time frame into the picture, because then you can actually see how aggressive that move was and where the potential is on the downside if the dollar, there's some bad news in the dollar or a geopolitical event or something else happens, then say, for instance, there was a massive geopolitical risk, the yen would come in as a safe haven and this thing would just drop like a lead balloon. So by shrinking up your charts, it's also a good way to see where potential is for the next move. Okay, so orange, just color code, doesn't need to be orange, but color code your stuff, then shrink up your chart, and you can see where the potential is in some of these moves. And that's where you can find the big potential, right? That's a smart thing to be doing on all these instruments, because then you can get a concept of, okay, what pairs should I be looking at? Where is the potential risk, right? And like the Kiwi here, massive down move, same as dollar yen. Well, the pen's gone a bit skew-if. And then you've got a move up here, which is 500 points higher, right? All it takes is one event, a big weak dollar event, we get all these moves happening. Once again, though, if the dollar trend, nothing happens and the dollar comes back strong, which it will when the Fed becomes the focus again, we know what levels to sort of be looking for on the downside to get back into these trades. All right, that's just a bit of a technical analysis, quick fix, how to do sort of scenario. I hope that helps. Give us some feedback. We'll get some more of these out there as well. All right, guys, have a good one. Cheerio.